Hello traders, welcome to Elliottwave-forex.com YouTube channel. Today is August the 6th and the chart of the day for today is silver. Here is a 60 minutes time frame here. So we ended with 3 over here in the intermediate degree and with 4 ended here in 3617. So we are in what we call an impulsive structure on the upside. So just to give you a very quick review of an impulsive structure is basically a move in the direction of the trend, which is in a 5 wave. So we have 1, 2, 3, 4, 5, and within 1, 2, 3, and 5, you can see it subdivides into another 5 waves, but in a lesser degree. So there are different degrees in the Elliott wave, and within 1, 3, and 5 subdivides into another 5 waves in the lesser degree. Now, as you can see here in the silver here, right? So we finished 3 and 4 here. If I zoom out to the daily time frame, so here is our 3 and 4, and this is our 1 and 2. So again, similar to what we have seen here, 1, 2, 3, 4, and then now finishing with 5, right? That's where we are. So we are starting a 5 waves rally, starting from this low here, which is the April 7 low, right? This is April 7 low. Now, by the way, this low is similar to all the lows you see in the indices, right? Global indices also ended the pullback in April low. Now, from here, we're looking for one more push higher to finish 5 ways up. Once it is finished, let's assume we go up here, then we could potentially end the entire cycle and then see at least a bigger 3 waves pullback like this to correct this 5 waves rally. Okay, so going back to the 1 hour time frame here, this pullback with 4 subdivides into a zigzag ABC 1, 2, 3, 4, 5 A, B 1, 2, 3, 4, 5 C, right? So if you look at this one with 4 subdivides into ABC, which is exactly what we see here with 4 subdivides into ABC. And now we are starting with 5 higher, and we soon will be ending with 1 of 5. So if you go to this one, we're soon going to be ending this one of 5. The degree is a little bit different than the silver, but the idea is the same. So this one here is similar to the one here in this example here. Okay, so we're looking for a bit more upside to finish this entire wave 1 as another 5 waves, and then from there we can get a pullback and then higher again. Now, in terms of target on the upside, guys, for wave 5 we can use a 1.236 external retracement target. So the way to do it is you do retracement of a wave 4. So you do retracement, right? It's just like doing simple Fibonacci retracement here from wave 3, starting from wave 3 peak to the wave 4, and then take the 1.236 over here, which is what we call the external retracement. So 40.3 approximately is going to be a potential target. Now, this is not a specific level target, but this is generally speaking the minimum target. There are different ways to measure with 5. Some people use with 1 equal with 5, and some others using 61.8% extension of the entire with 3. So there are a couple of different ways, but to figure out what usually is the minimum target, then we use this 1.236 external retracement. 40.2 or 40.3 is the next target here. It can potentially go higher, right? But that usually is the minimum target for wave 5. Okay, so for now, as long as we stay above 36.17, so yeah, we can see more upside. Now, a couple of things here you can observe. You notice the pullback here. This one is at the 100% extension area, guys. So it's a perfect example of a correction, because there is no extension whatsoever in these 3 waves. Third leg only reached 100% extension and then starting to rally, right? So this itself, by looking at this, it already gives you a clue that the market still remains bullish, because if it is not bullish, then you would have been expecting a 5 waves down like this, with 3 going to 1.618 usually, and then you will have a wave 4 and a wave 5 lower like this, right? But the fact that it's only 3 waves, there is no extension to 1.618, and it reacts, that tells you it is a bullish market. But it is very important, guys, when we trade, to trade in what we call this extreme area. This is what we call the extreme area, extreme zone. This right now is not extreme zone. Now a lot of people, especially in the non-member or even our members, would love to trade every single day, trade every single time, whatever they like, and then just look at the chart and then start trading everything. But the idea here, guys, is just because we have a forecast doesn't mean, oh, you should trade every single swing. I think the best way is still to wait for the proper zone to trade, which is what we call the extreme area. So notice here, and we did actually buy it here, by the way. It's not just a theory, but we did buy it here in the live trading room. We told our members to buy here, and you notice the reaction, right? Now with this reaction, if you bought it here, then you can take partial profit by now, move your stop loss, and then see if we can really go higher or not from here. Now the thing is, at this point, there is no guarantee we can really go higher. Now I know that sounds really, what kind of forecast is that? But the fact of the matter is there are multiple different paths, and it is therefore important to trade at the proper zone, because at this moment, because we've seen the reaction higher, we can always do what we call a double correction. If it fails to break the high, we can go down again, and then if I switch to the daily time frame, it can go down again like this. Now, but if it goes down again, then probably it's no longer wave 4 because it's getting too big, and probably then we have to change the count, maybe moving 3 and 4 here, right, and placing 5 here. And therefore, if we fail and go down, then suddenly there is a possibility that we might have already ended this entire cycle as a 5 waves, and then now starting to correct larger degree of the entire rally, right? So double definitely is a possibility, even though we are always calling the most aggressive view in the direction of the trend, and we believe the trend of gold and silver are bullish, and that's why when we see a pullback finish reaction, we will never try to call a double, because again, we want to be as aggressive as we want in the direction of the trend. Now again, that doesn't necessarily mean we completely, it's not possible to do double is a possibility. But if it does a double, guys, what happens is, again, if you trade it in the proper zone, nothing happens. You're not going to lose anything, even if it sells off. And then you can expect what happens if it does a double. You can expect the next leg of support at the next 100% extension again. Why? Because it still remains bullish even if it does another leg down, right? Especially considering the first leg is only a 3 waves, which is again confirming the idea it is still a bullish market. So if it does a double, you will get another buyers at the next 100%. That will become the extreme zone again. So that's the principle here in our method of what it means to find the right side of the market, and what it means that pullback against the trend or against the right side will always follow the sequence of 3 swing or 7 swing. Okay, so if you are interested in this, and if you want to get more updates on silver or any other indices, feel free to check our service. We have 14-day trial. I'll have included the link in the description of the video of the trial, and I'll see you all again next time. Have a nice day to you all.